Thank you for checking out another video here. And today I'm going to talk about a MACD strategy that also uses moving averages. It's a day trading one. Okay, so you can use 1 hour charts. You can use different charts, okay, different time frames. I just choose the 1 hour one. We're going to use the MACD, and we're going to use 3 exponential moving averages. Now, I talked in another video about the MACD, and the video is linked up above. So I'm not going to go to full details on the MACD. And this particular strategy is going to act as an indication of our trend direction and momentum direction. Our EMAs, they're going to act like a line in the sand. They're going to act as direction as well as triggers into the trade once they set up. And the line in the sand is just basically when price starts to break down below or above, we're looking at a trend direction change. And you're going to learn how to apply more of a day trading approach. And it's useful if you don't like to hold risk overnight. And like I mentioned, it's possible to expand it into a swing trading style as well as other time frames. So really knowing yourself as a trader is pretty important when you're designing your trading approach. So let's talk about the MACD. We're going to actually use a modified MACD. And it's the 310 oscillator MACD. Again, the video is above if you want to learn more about that. And I find that that particular setting is helpful when you want to know the short-term momentum as well as a medium length trend direction. So in this trading strategy, we're going to use the following settings for the moving averages. We're going to use the 50-period EMA of the highs, the 50-period EMA of the lows, and a 15-period EMA using the close. So our MACD, as I talked about, it's going to have different settings that you may not have seen before. The fast line's a 3. The slow line's a 10. It's a 16 smoothing. We're going to use simple moving averages if you have that. And we're not going to use the histogram for it, okay? But you can if you want to use it. So how do we use it? That 3-period line, this blue line, the MACD line, we want to use it to show our short-term momentum for this market or any market. And once that line hooks in either direction, the momentum, at least on a short-term basis, is in that direction. The 10-period orange line, the signal line, that's going to be looked at as a medium-term trend direction. We're not going to use that primarily, but you may find the odds of successful trades increase a little bit when it's at least going in your direction. Those two 50 EMA lines, they form a channel, and that slope can give us another indication of market momentum. We're going to consider pullbacks into the channel as well, but we don't want to see the 15 EMA inside the channel when we're trading. Now the 15 EMA, we're going to look at that as a conservative trade trigger. So once price closes below the average for longs, what we need to see is a break in the opposite direction for our trade entry. And if we find the moving average is inside the channel, especially when it's going sideways, we're going to consider that we're either in a range-bound market or we're looking at a trend transition. So here's some rules, and this is going to be mostly for the buys. The sells are going to be opposite. So the first question we have to ask, where's price? So if it's above the 50 EMA channel, we're going to prefer longs. Below the 50, we prefer shorts. And we're going to ask ourselves, has price pulled back below the 15-period EMA for long trades? So this stock chart, price is above the channel. And for some of it, it's above the 15 EMA. So what we need to see is price to pull back below the 15 EMA, which it does in the green circle. Well, that's our setup. So we're in an uptrend. Price has given us a pullback below the 15 EMA and a close below. That's really important. Now we have to see a trigger. And our trigger is very simple. Price will close above the 15 EMA. The MACD line, that fast line, we want to see it turning upwards on that. And your entry price can be at the close or do a buy stop order just above the highs. And you can see that price has closed above the moving average, and we do see a hook up in the fast line of the MACD. So a setup and an entry is part of the plan, but if you don't have a way to exit, you don't have anything. So let's take a look at stop loss locations and ways that we can take our profits. Now, risk management and saving your trading account from losses that are devastating is your job number one. And you're going to have several options. But again, you got to choose what suits your own comfort level. And one rule of thumb is just don't make your losses bigger than your profits. So if you just grab small profits, but you're taking full losing trades or worse, larger losses than you initially risked, your career in trading is going to be very short. So keeping things simple in trading generally means you are more apt to follow your trading plan. So number one, placing a stop loss below the swing low when you're going long, plus a little bit of a buffer, is pretty easy. And you might actually consider using the 1 times the ATR, the average true range. Subtract that from the low of the trigger candle to add some wiggle room. And number two, in a long trade, consider using the bottom of the channel for the initial stop distance. For number three, looking for exits when you're taking your profit, you could trail your stop loss up on the bottom of the channel. And number four, you could use the MACD line. So once the indicator puts in a lower low, consider that as an exit or a signal to place your stop just under the lows of the price. And five, though it's not on the chart here, pure price action, where you see reversal chart patterns begin to show up. Whatever you're using, be consistent in what you're using. Okay, so let's take a look at another chart. Now, there's no trading strategy that's going to put 100% wins together. It's just impossible. So let's take a look at Forex and the strategy in action here. And now this is a great chart to show a few things, including a losing trade. So number one, we basically have a no-go signal because the 15 EMA is going sideways through the channel. So it just keeps us out of that choppy mess. At number two is the first time we actually get our setup as this candle closes below the 15 EMA and price just keeps dropping. At number three, candle pops up and closes over our trigger, which is the 15 period EMA. Now you can see that the 15 EMA is inside the channel, but I want you to note the hook in the average, in the moving average, showing momentum join the party in the 15 EMA. Okay. Number four is the short setup as price closes above and then below the trigger. You can see we're below the channel. The short-term trade here gets a drop of about 53 pips. Number five, I want you to note the low on the MACD as you look back up at number four on that move down before the pullback. We like to see that when we're looking at trading pullbacks. Okay, it shows a little bit of momentum, and in this case, momentum to the downside, because that blue line is a momentum indicator. Now, I'll be honest with you, I picked one of the ugliest charts I could quickly find to show you that it's not always going to look pretty, it's not always going to be easy, and this one wasn't. Now, there are opportunities to tweak this trading strategy. You can use trend lines, trend line breaks, in addition to the moving average trigger. So here you see price closes below the 15 EMA and then breaks an upsloping trend line at the same time. We get the blue MACD line crossing the signal line down at number two there. That's not a bad little trade. A lot of things in your favor. Another way to refine it is to use a 15 EMA for trade management. So let's say you're short. Let's say you're short on this chart. And then price closes above the 15 EMA. You might want to consider that as a signal to start scaling out some of your position. And if price continues to rise, you've at least made some profit on the trade. And of course, depending on how you manage the trade. And then you have to find out how to exit after that. And if price does break down, just re-enter and just rejoin the move. I personally would not add any more indicators to the mix here, okay? Too many is just too many. But I would consider adding more chart reversal or continuation patterns. I like those. So let's wrap this up. In summary, it's pretty simple. We're trading pullbacks. But we're going to combine momentum and trend. And when you do that, you have the opportunity actually to catch some really strong momentum trends. and consider swing trading it as well. And this video is about a day trading strategy, because a lot of you don't like holding positions overnight, but it can really easily be refined into a longer term strategy. And again, as I always say, with any trading strategy, write it down, test your rules before risking real money. Appreciate you watching. Hit like, hit subscribe. Any questions or comments, pop them below. Thanks.